g'day there everybody. Welcome along to this very brief weekend market update. What I have just done is I finished that Pivot Point Pro analysis class as at Saturday. That is now up online at the website www.pivotpoint-trading.com. I just wanted to point out that it's always relatively interesting when people begin to comment, not so much comment, but also email to some extent, and give me their thoughts on the market, obviously contrary to what we've been saying here over the past week or so, or at least since coming back from vacation over New Year's and, of course, Christmas. That is that you should be a little bit tepid. You should also be a little bit concerned about the state of these markets, especially that of the Nasdaq as it continues to push to the upside. In particular, a lot of people have been sending me emails suggesting that the market itself is going to continue indefinitely on the current trajectory that it has been in really since the beginning of January. And I just wanted to point out that, or at least for me and my analysis and what I've been looking at, and historically speaking over the past 10 or so years, trading financial markets, that generally does not work out all too well for people, especially novice and green traders who may be potentially becoming a little bit drunk on some of the returns that they have been experiencing. Now, understand, of course, given the market dynamic, the environment that we are currently operating in it is very easy to, at this particular point, pick a winner, or at least to make a profit in the market. If you took a dart essentially and threw it against a dartboard full of ticker symbols, right, the odds that you are going to pick that of a profitable stock, at least in the very short term, is going to be abnormally high at this particular juncture. The reason for that is because the markets themselves, they are continuing to push and trend, at least to begin 2020. The problem really becomes in that we're really starting to see, all right, some material points of, I guess, technical concern, especially when we relate it back into that of the ADX and also the CCI. What I did in the pro analysis class was talk about this in great detail, what we use the ADX for, what we use, and how we use it in, I guess, synchronization with the CCI. What we have done more recently is we front run, of course, the breakout of the trend back in the period of October. That, of course, was when the ADX turned up, or at least the CCI broke above that positive 100 reading. And more particularly, is that in relation to the Nasdaq, it was when we began to break above the confines of what was that symmetrical triangle. Now, obviously, as the trend has continued all the way through to the current juncture, we're starting to see the ADX push on back on up into elevated readings. This is now the second occasion whereby the ADX on the Nasdaq is registering at 60. Now, what does this mean? I think it was Thursday. If not, it was certainly yesterday, being that of Friday. The Nasdaq itself is the most overbought. It is the most overheated. It is the most overpriced market that it has been relative to itself in the past 20 years. In and of itself, that is a huge concern. Okay, so we're really pushing on a string as to how far the Nasdaq can go up until a point whereby it just simply cannot go any further in relation to momentum itself. If you have a look at the ADX right now, I want you to zoom on out with me very quickly. Again, we went into detail with that recorded class, which is up online at the website. But if you go back and have a look at the ADX, and this is really interesting, and I'll let you in on a little secret here. Have a look at the relationship between Google, okay, the stock Google, obviously with the Nasdaq, and then sort of compare it against other tech leaders. This is all in relation to the ADX. And then think about the current readings on the VIX as well. Massive trade opportunity here that I broke down in detail again in that analysis class a couple of hours ago. But getting back into this, when it comes to the NASDAQ and the current readings of the ADX, remember how I was using the word antithesis here in the public form? The reason I say that is because where we currently are, obviously to start 2020, was the antithesis of how we really began the 2019 calendar year, understanding the Q4 period over here in 2018 as we led into the beginning of 2019, the calendar year. It was exceptionally bearish. It was pessimistic. Everyone was talking about recessionary fears. We came into the market at the beginning of 2019, and essentially on the Nasdaq itself, since the very low period over here at 6,696, these are all retrospective bullish triggers that we have had on the Nasdaq. We were in the minority, as the majority of people were very firmly on the bearish side of the market. We proved anyway, or it proved to be correct for us. And the majority of people were incorrect on that of the negativity of the market continuing further into 2019. We turned on a dime, and since that period, the market itself has been on a continued rip to the upside. Now, again, if you compare that, or at least contrast that against the public domain at the moment, the public sort of discourse, the narrative, if you wanted to call it, sort of the public sentiment, if you wanted to call it the psychology whereby everyone is backing up the trunk and getting absolutely drunk on these paper profits at the moment, here we are to begin, of course, the calendar year 2020. It is the complete antithesis to how we began the year, or at least closed out the year in 2018 and transitioned into 2019. So if you wanted to do the polar opposite as to what people were doing in the Q4 period of 2018, what you should be doing right now is liquidating those profits and being very concerned about the elevated reading on the ADX at the moment. Understanding that the majority of market participants at this particular point, they may have been paid off over the past 5 trading sessions. Yes, the markets themselves, they did close up higher relative to where we closed last Friday, obviously 1 week. And that's fine. That's all well and good. But that is paper unrealized profits at this moment. I understand and expect that the people championing for this bull market to continue indefinitely, once the market shifts, it is going to shift very quickly. There's going to be no warning about it. And those people who are starting to become a little bit chirpy at the moment, they are going to disappear very, very quickly. And the reason I say that is because there's going to be absolutely no warning prior to the turn. The turn is going to happen very quickly. And if you look back at the other elevated times on the ADX, whereby we were up at this area, understanding the ADX itself is non-discriminative, in that it will turn up whether or not the price action itself is continuing to rally, or if in fact it turns down. All the ADX does is it turns up once it has an agreed direction, or at least the momentum and the trend has made up its mind. If you wanted to go back prior to this, and this is a very big clue, if you go back to November, December 2017 into January of 2018, you can see the ADX pushing back up into that 60 reading, currently where we are. What happened? The market itself, it moved from 6.9 up to 7.5 before it collapsed in on itself. Okay, it rallied again, produced a secondary lower high on the ADX. It collapsed again. And what it turned out to be was the retesting of the original breakout point over here. This sort of theme seems very similar to what I've been speaking about over the past 2 weeks, or at least to begin 2020. And just because you may find yourself during this period here towards the end of the intermediate shift to the upside, it does not mean that you're going to avoid this natural downward period as well. Again, the ADX elevated on the downward side after this period at the beginning of 2018. If you wanted to go out further, the last time we really started to see these signals was back in the period of 2015, whereby the market itself really sort of collapsed and it got stuck in a sideways trading range, which in retrospect was another sort of rectangular pattern, very similar to what we've printed in the 2018-19 year, whereby it laid the platform, the foundation for the legitimate trend continuation up to the most recent prices before, of course, the market sort of setting up another rectangular pattern and continuing in its current directional form. So again, a massive warning out there for people who are looking to enter long. This market is testing you. Please understand that nothing has changed whatsoever over the past 2 weeks of analysis. And again, if you wanted to overlay this with Google, I know I said or at least I gave you the clue at the beginning of this video, but if you've come this far, you might as well see this. The ADX on Google is sort of like a, maybe potentially anyway, canary in the coal mine, so to speak, whereby it's up here at 70. The last times we've actually registered, what I'm doing at the moment is I'm trying to change from a candlestick to a line chart so you can see this. I'll actually take the annotations off the screen as well, so hopefully it clears it up and it makes it a little bit more clear for you. But if you look at the current reading on the ADX and you go back and have a look historically at very similar readings, you generally get these very sharp pullbacks in the price once the ADX is up and as elevated as what it currently is. Understanding that this is the price of Google, right? These are the retracements or the pullbacks that I've just highlighted for you in the price of Google. You can go back and bring the chart up of this for yourself. But if you wanted to see, Google sold off from 1275, for instance, down to say 975. It sold off from 1275 more recently. It didn't go as low, but it came back down to 1050. These are all very material retracements that have overlapped very closely with the NASDAQ itself. And again, the major warning here is that the ADX is up here at 70 once again. Very rarely, or at least since the movement into 2017, has the ADX been this elevated. And when you see this overlaying with the NASDAQ, all right, some major warning signals should begin actually sounding for you. Now, the final thing I'll show you is that when it comes also to some of the public analysis we've done, we've spoken about the Russell 2000. We were talking about market arbitrage on this particular chart itself. The reason we said that was because We saw the NASDAQ, the S&P 500, and the Dow rallying, whereby at the same time, the Russell 2000, it was still yet to actually clear above its respective resistance area from really February all the way through to, again, the period in October. I mean, we're talking about the arbitrage opportunity from the breakout point up until this past all-time high resistance area. Well, sort of rewind to Thursday and Friday of the week just gone. What's happened? We tagged on Thursday. We've seen the reversal candlestick on Friday. So we'll see whether or not this resistance area on the Russell 2000 has any sort of real grit to it. But there's sort of a little bit of a synergy going on at the moment whereby these markets, or at least the Russell, it has lagged these other three closely followed markets. And also, if I take it one step further for you and intertwine some analysis of the Dow Jones Transportational Average, to a lesser extent, we've also spoken about arbitrage on this market from 10,950 and 10,855 up to 11,344. It's past respective all-time high back in the period of August 2018. Well, coincidentally, have a look at this. We actually tagged this yesterday as at Friday. Okay, up here at 11,344. All of this analysis that I've just spoken about, I don't know how long I've spoke for, maybe 10 minutes or so. This is intertwining back into what I believe is going to be a great trade on the VIX itself. And I went into detail of what that was earlier in that class before, which can be found up on the website. So again, if you find this analysis interesting, I'd encourage you to jump into that analysis class. And although it has been a little bit of a slow period, I mean, very much so, it has been a very slow way to begin 2020. Just remember, of course, the calendar year that we had in 2019. And if it means that we have to wait a couple of weeks or even maybe a month or two to actually position ourselves for the remainder of the 10 or so months, right? Obviously left in the calendar year of 2020, it's going to be well worth it. A lot of people, unfortunately, they're a little bit blinded by the FOMO. What they would rather achieve is, say, a 1 week return, unrealized, of course, whereby they don't sell, which works against them, and then they sell for a massive loss, which just puts them behind the eight ball to begin, say, the calendar year of 2020. Do not do this. Don't buy into what the consensus is doing. It's very dangerous when you find yourself in the majority. Find yourself in the minority, especially during that of intermediate turning points. And I know it hasn't happened yet, but it doesn't mean that it's not going to happen. And this is essentially another imminent warning, whether or not it's next week or a couple of weeks. The correct thing to be doing, in my opinion, is to be sitting on the sidelines, maybe trading the VIX, which again is the shining light, so to speak, for the week upcoming, and then really strategically zeroing in on positions as to where you're going to buy and accumulate for the continuation of the trend further into 2020. So I'll leave it at that. If you're interested, jumping into that class. It's all automated now, so as soon as you sign up, you'll get access to it. Otherwise, everyone, enjoy your weekend. I've been a little bit crook personally. People in pro are privy to that. So, I mean, yeah, enjoy the rest of your weekend, and I'll see you. Actually, this coming Monday, obviously, the markets are closed in observance of Martin Luther King Day. So we are looking at an abbreviated week's worth of trade, Tuesday through Friday. That'll be the final piece of housekeeping. Actually, also, we're obviously moving into earnings season as well. The dates of our top 12 list, that is up on the website in the Pivot Point Pro class as well. All right, it's James signing off on behalf of Pivot Point Trading. All the best, everyone. Farewell.